What's happening, guys? Welcome to another edition of This Week in Crypto. I'm your host, Brian, alongside Dino here. We're excited to get into quite a few things that have been happening in the markets. It's been a bit of a red week, as most of you know. Before we begin, as always, I want to remind everyone that what we'll be going over today is our on-chain and social data that's available on our Santiment platform. It's available to everyone on a free extent with the addition of full real-time access to all of our charts if you have a Sandbase Pro account. So if you have not yet explored Sandbase Pro, just remember that you can sign up today and get 2 weeks free before your first month actually begins. After that, it can be as low as $45 a month. So we hope to have you, whether it's in a free basis, just as a part of our community, or for our more advanced groups in the Sandbase Pro chat. Both are available on our Discord, and we'll be happy to take questions and talk with you guys there afterwards. For now, as always, I am starting off by showing our screener here. You'll notice we have one outlier piece of data that is skewing our chart a bit, but in general, what I'll just quickly do here is go over some of the big wins and big losses in the top 100 market cap here. As we can see, Bitcoin and Ethereum we're both at about negative 9% over the past week. Bitcoin got down to about 51,000 before popping back up today to a little over 53. Ethereum is kind of in that same boat where it's been ranging between 1550 and 1650 for a while. It's back over 1600 now. We'll be going into a few reasons as to why the decline happened and where we're at now as far as expecting a rebound. We had a few outliers here. XRP had a great rebound week right around the beginning of the week. It really started to take off as it looked like a lot of the negative sentiment had really started to take control. And when that often happens, as you guys have seen on many of our analyses in the past, that negative sentiment can often lead to the best times to buy, right? And alternatively, when you see a lot of euphoric sentiment, as we saw for Bitcoin and Ethereum in late February when those local tops came in and we saw all-time highs, that's when you'll often see the price reversals happen and many people get sort of fooled into buying toward the very top. We saw that with a few coins like Chainlink in particular, and I'll get into the article that I wrote earlier this week about it very briefly. So yeah, as far as big outliers went, we had BitTorrent with a huge week. We had Theta with a huge week. We had Filecoin with a decently big week. We had PundiX. We had Harmony. And the other one I remember is, Dent here really took off, as well as Ankr. Ankr has been one of the big emerging trends assets as of today. So that's a very recent pump. So yeah, interesting results here. It's been mostly red, as you would expect, and it's going to always tend to be that way when Bitcoin and Ethereum decline. But when you see something like, Bitcoin flatten out, that's when you'll really start to see these major separations of altcoins that are going up and others that are kind of sticking with wherever Bitcoin decides to go. That's why our on-chain and social data is so important, because you can use all of the graphs that we're going to get into to your advantage to find which ones are seeing those bullish divergences and which ones are kind of just sitting back and waiting for Bitcoin and Ethereum to dictate the way. All right, that being said, our emerging trends as of now show that Ankr, VeChain, those are the only two assets that are currently on our top 10. The rest are other various crypto terms. But yeah, Ankr is pumping for reasons related to its price, of course, and VeChain, same thing. It's really had, especially early in the week, it really had a surge that caught a lot of people's eyes. There's a lot of positive social sentiment related to VeChain right now, and we'll maybe get into it when we have time. And just as a reminder, guys, if you're on our YouTube right now and you're watching, make sure to drop a few assets that you have in mind, maybe one in particular, right? So that we can really see it. And we'll use the second half of this call to really explore some of the assets that you guys would like some additional information on.
Yeah, so Ankr is probably pumping because of the Coinbase Pro announcement.
Right.
And then VeChain has been doing the rounds this entire week. We have some very interesting charts for Ankr. I've been checking them out later. So if anybody is interested in that particular coin, let me know in the chat and we can take a look at it a bit later. If not, just let us know what coins you guys want us to look into, because basically we're going to be talking about Bitcoin for the next 20 minutes or so, and then we're just going to jump into your questions. So we're hoping to have more of the stream this week dedicated to just user questions and chat asking us about specific coins. So if you have one or two coins that you would like us to look at, just let us know in chat, and I'll especially if there's a request, multiple requests for the same coin, we'll jump in those in about 20 minutes or so.
Yep, thanks, Dino. So to kick it off, I wanted to briefly look at what the weighted sentiment was looking like for Bitcoin, Ethereum. This is a brand new chart as far as its availability on Sandbase itself. Many of you may be familiar with the many weeks that we showed it on a side platform known as graphs.santiment.net/social. But now we have it directly on Sandbase. And I want to quickly point out how vital we really think this kind of chart is. What it essentially is showing is the overall positive versus negative ratio over time for Bitcoin here in pink and Ethereum in red. I'll highlight just Bitcoin for a minute here, because what it's basically showing is the positive versus negative ratio multiplied by the social volume over time. And as you'd expect, when we were on quite the bull run here, ever since mid-January, right, when it started to take off, most of the pink bars are in the positive territory, with a few of those negative ones in between, right? And most of the negative ones, let me switch really quick to Twitter, make sure I get the best ones here possible.
Yeah, that's probably the biggest, or basically for people that are unfamiliar with our social sentiment and how it works, on a daily basis while Brian is showing the data. And Brian, make sure that you take the 1 day interval, because that's usually the most reliable. On a daily basis, we receive about 100,000 new messages every day from crypto-specific social media channels. So this is Telegram, Twitter, crypto subreddits, a variety of different channels, right? And what you get as a result is one of the metrics that you get as a result is this weighted social sentiment, which the way it works is we label all of these messages as either positive or negative or ambivalent, and the difference between the positive and negative messages becomes this chart, which shows, spikes in this metric means that on average, the sentiment is very bullish towards a specific coin, and then dips mean that the sentiment is on average very bearish towards a coin. The reason why Twitter is usually the most reliable of all of our different social sources is because our machine learning algorithm has been trained on Twitter's data. So usually I have found, at least in the past, that looking at Twitter's data is probably the best way to go as far as figuring out the specific sentiment of the crowd, right? So,
yeah. So as we saw in the total weighted social sentiment, you could see that it was mostly just positive bars, right? But what's nice about using just Twitter here is you can really see when the big positive bars, which are outliers, sort of come into play. And very oftentimes, right after they come into play, you'll see a local top happen, beginning here in January 29th, going into 2020 bars, 2021 bars over the last 3 months. You can see the instant retracement once euphoria was starting to kick in right around here. And then again, here on February 8th, big decline. I'd call it a modest decline, of course. And then we had another big outlier here right before the big local top. And then another one right before the huge top at around 61K. So long story short, you want to be buying when bars are looking like this and there's a little more concern and FUD and lack of faith in Bitcoin's ability to continue moving upward, right? And right now, I don't want to say with utmost confidence, Dino, but from what you see here with this latest bar, do you think this is a complete bar that really is going to stay this way?
So if you look at the maybe a better sort of presentation of this chart is, instead of a bar chart, using a filled line, because it really shows where we are at the moment. There you go. So this is in fact the entire day of data. It's actually been like that for, I think, last 2 days. Basically, as soon as we dumped into the 51K category, we saw this massive decline in the average sentiment towards Bitcoin. Actually, if you zoom out to the last year of data, you'll notice that this is the lowest that we've had in terms of Bitcoin related sentiment. This is the lowest bar that we've seen for the last year, right? So what this is suggesting is that we are in fact, or the market in general is in fact fairly bearish about BTC because of its March price action. And as Brian said, obviously, past performance is never fully indicative of future results. So take everything with a grain of salt. And obviously, none of this should be considered as financial advice. What we see usually in this chart is that very large and consistent spikes, bullish spikes, are rarely a friend to Bitcoin, and not just to Bitcoin, but to cryptocurrencies in general. So we've actually done some backtests in the past where we've looked at about 3,000 different coins and what happens when they reach their sort of local peak in terms of bullish sentiment, and what happens with their price after that, and also what happens with their price after they reach their local bearish peak, basically when the crowd is the most bearish about that specific asset. And the results were pretty straightforward. When we saw spikes or local spikes in terms of bullishness, usually that indicated the end of the rally and the beginning of the price consolidation, not just for Bitcoin, but like I said, on a very large sample size of coins, everything that we have in our database, basically. And then on the other hand, when we and I can share, the link to that. Actually, Gary, if you can share a link to that study for everybody that's interested in chat. On the other hand, what we found is that when a coin hits a certain local bearish bottom, it usually points to almost immediate to a very sort of short-term price recovery. So I'm not surprised that we're now seeing a slight recovery for Bitcoin already, because the general sentiment of the crowd seems to be very bearish. There seems to be a lot of FUD, a lot of panic about Bitcoin's basically entire March price action, right? And on the other hand, if you look at the funding rate on BitMEX in particular, but I've looked at a few different centralized exchanges and derivative providers over the last couple of days, they've pretty much all sort of retreated back to neutral territory. So the funding rate is the fee that is paid by one side of the perpetual contract to the other. So when the funding rate is high, that means the longs are paying shorts, and that on average, the derivatives market is bullish. And then on the other hand, when the funding rate is low or negative, that means that the bears are paying, the shorts are paying longs. Basically, the market is on average bearish. So similar to what you see with weighted social sentiment, these large spikes in funding rate have kind of coincided with both the January and February price stop for Bitcoin, as well as the March sort of rally, right? The March rally really stopped the moment that we saw this biggest spike in the funding rate in over a month. In the last 2 weeks, however, first of all, there's been a consistent, steady decline in the funding rate, not just on BitMEX, but on Kraken, Upbit, Binance as well. Currently, they're on most of the biggest centralized exchanges when it comes to derivative volumes. The funding rate is at around 0.01%. So basically at a sort of neutral territory. Now we're not still going into the negative territory as far as the funding rate is concerned. So that means that on average the market is sort of undecided, whereas the social sentiment shows that the market is very much bearish. However, it's definitely, the trend is down. The general pattern is we're declining in terms of the sentiment, not just as far as the crypto community and the Twitter, degens are concerned, but also as far as the derivative market is concerned. All of these, in the past at least, have been positive signals for the price of Bitcoin, right? The more that the people are panicking, the more that the people are sort of concerned about the short-term and mid-term price action of Bitcoin. That has usually been the case, usually been the time or a period where we saw price recovery for BTC and by proxy for much of the market. So, keep an eye on these two charts as far as the best off-chain indicators that we have on our platform. But like I said, because of these dips, especially in Bitcoin-related sentiment, I'm not surprised that we saw like a 6-7% upswing in BTC today, and most of the alts also being in green for the last 24 hours.
Yeah, I agree, Dino. I was going to talk a little bit about the funding rate myself, but you covered it very succinctly. On the funding rate side, we going back here really quick, If I just remove Ethereum, so Bitcoin has been quite flat actually for about a month now. Obviously, we had these big spikes here, which rose quite rapidly as we approached that all-time high. But for the most part, you're seeing a lot more flatness compared to what we saw in December, January, and early February, right? And because of that, it looks like things are becoming a bit more, I wouldn't say reflective of worry, but definitely a little more uncertainty than what we saw at the beginning of the year. And that's kind of reflective in the weighted social sentiment here as well. Obviously, as Dino said, a 1-year low yesterday, or very close to it, right? We had a few in July and September here, but give or take, the bottom five most negative days happened yesterday. And I'd be very curious to see if it stays here through the weekend. If it does, that's a pretty good sign that Bitcoin has a good shot of recovering, right? If it does pop right back up, and this is more of just a quick outlier, then maybe we'll see a little more ranging, even a decline if it starts to get really positive and it goes back to maybe 55 and the social sentiment starts to get, euphoric again. That's what you don't want to see. So
Yeah. So, Brian, we
really,
also got a question from somebody in chat about the social sentiment. First name, second name says, is it possible to manipulate the sentiment of some coins and how to avoid that? So, actually, very good question. One of the ways that we try to avoid that or try to rectify it is with the way that our algorithm works. So, we actually have built something called the spam index for pretty much every coin that we follow or track social data for. So first of all, multiple messages or duplicate messages are immediately sort of filtered out from the social sentiment data. And also the accounts or messages that we have labeled as bot messages or spam messages, obviously, they're also labeled as such through our machine learning algorithm, but they are also filtered out of the equation. So we're really trying, and obviously this is a work in progress. This is as far as I know, the only metric of its kind on the market, right? And it's obviously an experimental metric, something that we have developed from the ground up. Not saying that it's perfect by any stretch, but I think it's the closest to real sort of sense of where the sentiment of the crowd is at the moment. And yes, we are trying to eliminate bot traffic as much as possible. For some coins, there's a lot more bot traffic than for others. Like, for example, I'm not going to get into it now, but I can show you the spam index for coins like Chainlink and coins like XRP versus something like, I don't know, some small caps like the Decentraland. You'll see very strong differences in their spam index, right? Especially when they start to rally, you see bot traffic really start to ramp up. So we're trying to eliminate that as much as possible in our calculations there.
yeah, and Dino actually mentioned Chainlink, and really briefly, I can show you guys what I found in the weighted sentiment from a few days ago when I made this quick pulse insight about Chainlink. And essentially, it's kind of like what Dino suggested, because of the fact that there are huge outliers and big swings in weighted sentiment, and sometimes that can be related to spam index. You'll see these huge spikes here, and then it looks flat and dormant the rest of the time. We want to optimize that, right? We want to make sure that there's a little more noise here so you can see when things are becoming positive and it doesn't just look like, everything is flat here for the past month and a half, because it definitely hasn't been. But in general, Chainlink has been a little more on the dormant side compared to previous months, especially if you go back to last summer when it was really noisy. So it's a little less reliable with altcoins right now, but Bitcoin, Ethereum, I think it's a very strong indicator that I'm really happy we now have on Sandbase. Okay, that being said, I want to transition so that we have plenty of time for questions. This is the daily active address trend over time for Bitcoin. We posted about this a couple days ago, showing that the long-term trend still looks quite good. Over the last 6 months here, you can clearly see that the orange line is moving up over time. We can even zoom out, look at the last year, and it's looking almost even better from this perspective. So long story short, the address activity continues to look good. Again, for those unfamiliar, this is measuring the amount of unique addresses transacting in a given day, whether it be active deposits, transactions between one address or another, what have you. So generally speaking, prices will follow address activity given enough time, and you'll often see bullish and bearish divergences in it even to take advantage of. On the trading volume side, it's also starting to rise up again. You can see it got down in late February, early March, but is starting to rise back up. It's not nearly where it was in January and to mid-February, but it's getting there, right? And we're at least at a point where it's getting back to that top half of the yearly trend, right, on volume. So that's a good sign, right? Those together, especially with social volume rising, are generally a sign that Bitcoin is still in a healthy phase. And we have one of our more popular articles over the last 2 years was all about this. And I encourage you guys to check it out. Gary, if you want to find that and link it in our YouTube chat, I think that would be a really interesting piece for people who have not yet discovered it to check out. All right, and similarly on the Ethereum side, daily active addresses continue to look good. I think we can ignore this. This one may have been an outlier in our data here, but overall, you can see that the orange line continues to creep up. I'll zoom out to 1 year once again.
Yeah, you can also show the 24-hour rolling daily active addresses to remove.
Yeah, I can do that, sure.
To remove that big dip.
So there it is in pink. You can see it here. It's basically a huge uptrend ever since late August, early September. Right around here, it just really began to take off, and subsequently so did the price, right? The price at the time when it was at its lowest was around 350-ish, give or take. And the address activity had a lot to do with it, especially right here in early January. This was the all-time high in terms of the level of active addresses on an hourly basis, and about give or take a month after is when it actually hit its all-time high. So this would be considered a bullish divergence when the active address or address activity is high, but the price is kind of hanging around, right? That's when you want to see it and say, oh, this is a huge outlier. It's happening for multiple hours here. And eventually the price was able to follow it. And when it did, once we hit that all-time high, address activity began to drop again, or at least level out, right? It's kind of been hovering in this range ever since early January. So in order for us to recover and get back over 2000 and beyond that, we'd want to see this pink bar continue to rise and not just range where it is right now. All right, really quickly on mean dollar invested age, I'm going to just isolate Bitcoin, Ethereum. So Bitcoin is in tan here. You can see that over time, the amount of the average age of the dollars invested in Bitcoin over time has continued to drop. It has flattened out. Let me just go to the last month. So it's kind of flattened out here over the past week to 2 weeks or so. This rise is not that big of a deal. If it happened for like a week straight, that's how we would know that the dormant invested dollars are starting to not move anymore, and that would be a bad sign. But 1 day of it, not a big deal. Ethereum, on the other hand, hasn't even really shown any signs of dropping, and even in the last couple of days, it had a huge drop on the 23rd to the 24th, and a minor one on the 24th to 25th. So good sign there for both. And as long as for both assets, the amount of dollars being the age of the dollars that are being circulated continues, we'll see that the prices are going to be in a healthy spot.
Yeah, this is a very long-term metric actually, so it's probably
Definitely
best to look at it on like maybe like the last 5 years or something. Really, really, what you should take away from this is that declining slope means that redistribution is still taking place. Coins are being moved away from one wallet to another at a fairly rapid pace, and this is something that has kind of coincided with all of the previous Bitcoin rallies. Usually what happens is that when this metric starts to incline once again, it suggests that redistribution is officially over. and we move into a beginning of a bearish cycle or a bearish trend, right? So you saw that in 2017. You saw the same thing in 2019. Currently, we are still sort of in a redistribution phase, I believe, and I think a few people in the sentiment team believe mostly this redistribution means, redistribution from sort of people that have acquired Bitcoin in the past several years, mostly towards institutional investors over the last 6 months. So that's where I think redistribution is mostly headed towards. Whereas, for example, in 2017, it was more so from like early adopters into the first sort of wave of mainstream investors into the cryptocurrency space, right? Either way, the redistribution of coins is still trucking along. We're not seeing it slow down just yet. So in general, the market, as far as this metric is concerned, still looks fairly healthy.
Yep. Thanks, Dino. Moving on to average fees, we can see that Ethereum's fees are beginning to drop again. Right now, they're sitting at about $12.89 per transaction. That's, we're still in a very high range compared to what it's looked like over the last 6 months, but we're at least starting to approach, that average fee of around $10 when it starts to become more appealing for the average trader to make transactions freely without, constantly fearing the fees just eating up their ability to make profitable transactions. So, our all-time high was just about a month ago now, where it got up to about $37.60, which is pretty absurd. We're hoping that doesn't happen again, but we're at least moving down in the right direction. And I like $10 as a good psychological number for us to stay under. So if we can get there, that's going to be a very good sign for Ethereum's prospects to pick back up again.
Yeah, so Brian, since we're already like 25 minutes in, maybe let's look at Bitcoin whales and let's, maybe end it with that, or we can look at network profit loss as well afterwards. Yep. But those two metrics, I think, should sort of circle this discussion around the Bitcoin general sentiment and general activity, and then we can move into questions.
Yeah, sounds good. So we'll wrap it up with Bitcoin whales, and we'll show a few different perspectives, because Dino and I were talking before the call about different ways we can look at things, right? Yeah. I commonly like to look at, what's going on with the 1,000 plus whales, but there are multiple ways you can look at things where things may look more optimistic or less optimistic. From just an objective standpoint, looking at just whale addresses of 1,000 or above, we can see that the number of addresses has declined over the last month and a half. Since it peaked at 2,489, it's now down to 2,261. However, we can break that up a little bit. I'll unmerge everything here. And I'm just going to show, actually, I'll start with 100. So I'll show these 4 brackets here. The pink one is 100 to 1,000. The red is 1,000 to 10,000. The yellow is 10,000 to 100,000, and blue is 100,000 to 1,000,000. Now, we kind of believe that there's been a bit of a redistribution, and this doesn't necessarily mean anything bad that the 1,000 to 10,000 and 10,000 to 100,000 are dropping so much, because of the fact that 100 to 1,000 are rising. And it could just mean that the larger addresses are splitting, moving into separate assets, having multiple addresses in different areas, which is causing it to rise on the pink line here. Now we can look at the percentage standpoint really quick.
Yeah, so really, if you look at the behavior of 100 to 1,000 and 1,000, first of all, why are we looking at those two groups in particular, right? I think for the most part, first of all, there's not a lot of addresses that have more than 10,000 BTC, and most of them are going to be exchange wallets. It's just right. A matter of fact. So usually what you really want to, if you're looking for where whales are, it's mostly going to be 1,000 to 10,000 BTC, and then also like 100 to 1,000 BTC group. They're still Bitcoin millionaires. Like they are.
Yeah, that's 5.5 million and above.
Exactly. So. They're still very well off. Like there's currently around 14,000 of those addresses, so there's quite a bit more than the next group. But they're still, I would consider them whales. Yep. So the reason why I think it can be sort of misleading if you only look at one of the groups, is precisely because of what Brian is showing. And actually, Brian, if you want to also plot the price of Bitcoin against it so people can see where it happened. So these two groups, 100 to 1,000 and 1,000 to 10,000, they've been playing some sort of just a mirror game over the last, I want to say, last month and a half. So both in terms of the number of addresses and both in terms of the balance of these addresses, they have mirrored each other since basically early February. So here, actually, Brian, can you filter out anything above 1,000 to 10,000, just for clarity?
Just the two of them. Okay.
Yeah, just the two of them. So yeah, I mean, obviously this is all going to be, unless we can dive into every single address, it's going to need to take some amount of speculation of what's going on here, right? But based on the news that I've been seeing around, Grayscale and other large investors, and based on the just general patterns, I'm less concerned about the 1,000 to 10,000 BTC group starting to decline so much over the last 2 months, because I see a almost simultaneous spike in the group below it, which is still, filled with millionaire wallets. And I think it's mostly large institutional custodian wallets sort of sharding their holdings into a bunch of smaller wallets, probably even for security reasons against, among other things. So if you merge those two groups together, 100 to 1,000 and 1,000 to 10,000, if we take the assumption that they are probably in cahoots, so to speak, and if you take them together, you're actually going to see a slight uptick in the last week. Well, actually not a slight, about 40,000 Bitcoin there. So you zoom into the last month of data, Brian, just so people can see it a bit more clearly. There we go. So the last time, first of all, let's look at what happened the last time. So during Bitcoin's all-time high here in March, this was the first time that we saw in about 2 weeks that we really saw these two groups of addresses start to shed some of their holdings collectively. So this is about 40,000 Bitcoin that has went away from these Bitcoin multimillionaire wallets right around the time that we saw Bitcoin start to correct, right? So over the last week or so, we have really seen a strong, quote unquote accumulation by these two groups of addresses together. Once again, about 40,000 Bitcoin, which is, about $2.5 billion or something like that. So assuming, which I think is probably the case, that these two groups of addresses are likely just reshuffling between each other, the fact that combined their balances are starting to grow, I think is more optimistic than just looking at the 1,000 BTC group and above, because it's probably going to, it takes away a strong part of that, or a key part of that puzzle. Where it's likely just a redistribution to smaller wallets, right? So yeah, overall, I think this is also a good sign for Bitcoin, is that we're seeing whales, I think at least, move back into the asset, right, over the last 7 days or so. And so the fact that once again we are up about 7% on the day is not very surprising to me. Similar with what we saw in terms of Bitcoin weighted sentiment. And then finally, Brian, if you want to look at age consumed and network profit loss for Bitcoin for the last month, I think it's also interesting to see, because it also shows, similar to what we saw in terms of Bitcoin sentiment, that people are starting to get very scared, or at least pretty bearish about the short-term prospects of Bitcoin. We are also seeing signs of that in Bitcoin's on-chain data, particularly when you look at age consumed. So age consumed is a metric that tracks the movement of previously dormant coins. So when you see spikes in age consumed, all that means is that the coins that have previously been inactive are starting to move on the blockchain again, a significant amount of those coins, right? So in a vacuum, age consumed is not really a top or a bottom indicator. It's really a volatility signal. It's a signal that there's a strong behavioral shift in the sort of sentiment of long-term holders. And that's why you'll see spikes in age consumed around both local tops and local bottoms. So you see this massive spike on March 13th, right around the Bitcoin top. But then on the other hand, you see a string of spikes around the local Bitcoin bottoms as well. So in the last 24 to 48 hours, we have actually seen a cluster of age-consumed spikes right as Bitcoin started to bottom out, suggesting slight holder capitulation by some of long-term or veteran BTC holders, which is actually, I think, pretty good, right? In general, it points to a healthy dose of fear about the market in general, and it suggests that we are not as overvalued as we might have been a month ago. And then if you look at network realized profit loss for Bitcoin, you're going to actually see the same thing. So network realized profit or loss is a metric that tries to calculate the total overall ROI of the network on a daily basis across all of their transactions. So essentially what that means is that when you see spikes in network profit loss, it means that on average, all of the coins that are being moved on the blockchain are being moved at a significant profit. And then if you see dips in network profit loss, it means that most of the coins are on average being moved at significant loss, right? So over the last 72 hours, maybe even 4 days, basically this entire week, as Bitcoin started to decline, we have seen spikes in net profit loss after a week of dormancy, which to me suggests that people are starting to take profit once again. And I don't think this is a bad thing. If you see the previous, between March, March 15th and March 18th, basically the last time Bitcoin corrected, you saw a same pattern. You saw, for a first time in a while, you saw spikes in net profit loss, suggesting that, coins that are moving on the blockchain are doing so at significant profit, suggesting that people are starting to take profit, being scared that we're going to dump even further. And, this is something that I've been seeing on the timeline both then and now. So once again, moving back into current day or present day, you're seeing another sort of cluster of 3 or 4 net profit loss spikes over the last couple of days as Bitcoin starts to correct, suggesting that people are being, sort of forced a little bit out of the market, taking some profits for the time being. Obviously, you don't want to see, like a long-term wholesale capitulation of holders. However, these signs of short-term FUD aren't necessarily, in my opinion, bad. And usually, if you look at historical data for Bitcoin, they have actually fairly often earmarked local bottoms for BTC. So there is quite a bit of, some scares and quite a bit of FUD about BTC for the time being, which is good. It's healthy to see fear. It's healthy to see blood in the streets at these types of events. We've been pumping for 5 months. It's about time that people start to be a bit scared about the market, start to question how much this rally can go on. I think that's probably going to be necessary in order for us to really break above 60K again.
So in terms of alpha on this kind of metric, Dino, are you generally looking for when it's most dormant as local bottoms?
Actually, the opposite. I would look at, so for example, if you look at between March 11th and March 14th. So we had spikes in, first of all, there's the difference whether these spikes occur during price rallies or price declines. Usually, when they occur during price rallies, it just means people are taking profits at certain milestones, certain thresholds, certain resistance levels, so on and so forth, which is fine. Like for a lot of alts, when you see these spikes in net profit loss, they usually tend to indicate local tops because there's taking profits in low liquidity coins is usually going to be an indicator of an incoming correction. For Bitcoin, not so much. It's sort of a natural or a healthy part of the Bitcoin rally process. However, it was really the part where they stopped taking profits. So between March 12th and March 15th, that we saw Bitcoin sort of move into that overvalued territory and start to waver, right? So if you zoom out, maybe last 3 months or last 6 months, let's say last 3 months. Right. So take the January rally as well. Maybe zoom into the January rally there. Yeah. So you can see the like between 24 to 48 hours before Bitcoin started to dump, we saw a decline in net profit loss for the first time in basically 2 weeks. We saw a period of relative dormancy, suggesting that people are starting to, just hold on to their bags, believe that we're going to break 40K and then 50K as well. So this is not an isolated case. If you go even back further into past for Bitcoin, and over the last couple of years, we have seen several instances where net profit loss grinds to a halt for sometimes 24 to 48 hours, sometimes a few weeks, and that's a period of when the Bitcoin rally really stops, and we see a short-term correction. Now, as far as what happens on the other side, when you see a price of a Bitcoin start to decline, and during those types of periods, net profit loss starts to spike, I think it's a completely different story. I think that points to, like I said, a lot of people being fairly bearish about the market, similar to what we've seen in social sentiment as well. And in general, market being undervalued for the time being. A lot of people thinking that we are, headed for a very large, strong correction, which usually, is a good sign of a short-term bottom. So this is what we've seen over the last 24 to, I think, even 72 hours, like you showed a minute ago on a monthly chart, Brian. So for me, when I see spikes in net profit loss around during price dumps, it usually indicates that, there's a short-term holder capitulation, and there's an increased likelihood, not a guarantee by any chance, but an increased likelihood that we are going to see a short-term price recovery for Bitcoin or other alts.
Great stuff, Dino. Yeah, it's really interesting to see how this realized profit loss metric, which is still quite fresh on our platform, ends up revealing where markets end up heading as a result. And I'm understanding it more and more myself. So hearing you explain how it's working and what kind of alpha you can extract from it is fascinating stuff. So thanks for that. I would suggest at this point we start taking some questions from the audience and see how many we can get through here.
Agreed.
So if you want to start sharing your screen, Dino, and then I'll disable right after, that would probably be ideal.
Let me do that. So, guys, tell me in chat if you can see my screen. And we can start taking some questions. So I saw a few people ask about Ankr. I saw XRP. I saw Litecoin. So those are the coins that I saw multiple sort of questions about. So let's start with those. Ankr in particular, I think, is quite interesting. I've been checking it out a little bit before the call, and I think it's a good place to start because it shows patterns that I think everybody can use in general, right? So even if you're not really invested into Ankr or don't really care about the coin, like I don't, I'm not, I don't hold any Ankr, but I think it shows very interesting on-chain and social patterns that you can learn from regardless of whether you care about Ankr or not, because you can kind of use them and translate them to the coins that you actually care about. So all right, let's look at Ankr. It's obviously been pumping like crazy for a while now. All right, so a few metrics that I want to check out. First of all, I want to start with off-chain indicators before we go into blockchain data. So like I said, let's start with social volume. This is one of the metrics that we are really unique by. Nobody really on the market has this type of data, at least not at this scale. Once again, to very briefly explain, social volume shows the amount of mentions of a particular coin on crypto-related social media. This is on more than 1,000 different crypto social channels, Telegram, Reddit, Twitter, so on and so forth. So as a rule of thumb, what we have seen and what we have backtested as well, when we see spikes in social volume, that suggests, first of all, that everybody or the crowd, the mainstream crypto community is becoming very or hyper aware of the rally. So it's no longer flying under the radar. So one of the things that indicates is that the buy pressure is going to start to decline because everybody that wanted to buy into the rally is already bought in. And second of all, it suggests that we are very rapidly approaching, peak hype, where the crowd is becoming overly or irrationally confident about that coin's price performance. Because most of these, when you see spikes in social volume during price rallies like here, and here, most of these mentions aren't like, oh man, I don't know, Ankr is maybe, I'm kind of worried about Ankr. No, most of these are Ankr and then 3 rocket emojis, Ankr and 3 fire emojis. These are people trying to pump their bags, and pump their new people trying to pump their newly bought bags. So this is why usually you see spikes in social volume coincide with local price stops. You have seen it here. Obviously, it pales in comparison because these are so much larger, but you've seen this happen here both during this stop and then this stop right afterwards. You saw it, if we zoom in a bit, you saw it, let me take a 30 minutes. You saw it here and then once again here for Ankr. So the moment that we saw these massive spikes in social volume, we started seeing high volatility in terms of price and the beginning of a consolidation. So for now, it's fairly concerning that the social volume for Ankr is high. At the moment, I think, according to our SanR trends, which is a list that gets updated every hour and tries to calculate or find the most trendy words on crypto social media, basically the most popular terms, Ankr is currently #1. So the study that I shared, or that Gary shared in chat, shows this chart at the beginning. And this is a study that we've done about a month ago on a sample size of about 650 coins, where we tried to test what happens with a coin before and after they end up on this list, and more specifically, before and after they end up in the top 3 positions on this list. These are the results. On about 650 different coins or events, the average price of these coins starts to rally very shortly before they claim the top 3 position on social trends, which makes perfect sense because usually people start talking about the coin because it's pumping. And then this is their average price performance in the 20-day afterwards. And this is a pretty large sample size. On a sample size of about 650 different events, the average price of these coins drops by 11.2% in the 20 days after they show up on our list of social trends. So, take that for what you will, but in general, as a rule of thumb, you don't want to see these massive spikes in social volume. So I would keep an eye on Ankr in the next couple of days. If Ankr social volume starts to normalize and start to move back into sort of these levels where not a lot of people care or talk about Ankr, there might be a potential for another leg up. For now, however, I would be wary about moving into Ankr. This isn't to say that it can't do another leg up, another 15 to 30% in a couple of days. However, it usually does suggest that a short-term correction is in play, right? So that's as far as social volume is concerned. Now, let's look at general on-chain activity. So I want to start with the on-chain data, with exchange-related data. 2 of the favorite metrics of mine to use when I'm exploring on-chain data are daily deposits and exchange inflow. So daily deposits are, or daily active deposits, are addresses that are being used to funnel Ankr to centralized exchanges, right? So when you see spikes or rises in daily deposits, that means that more addresses are being used to funnel Ankr to exchanges, presumably to sell, right? So this is why we use daily deposits sort of as a proxy for the amount of sell side pressure, right? The more there are daily deposits, the more people are moving money, moving Ankr to sell, and the more sell side pressure they're applying to the coin. So that's why you see, first of all, you see this massive spike in daily deposits before a correction. You see a strong uptick in daily deposits in March, in the mid-March before we had another correction. And then you see it here and here. Over the next couple of days, really, there's been a cluster of the deposit spikes. So after a period of dormancy, coinciding with the dormancy of its price, we see a large spike in the amount of addresses moving Ankr to exchanges, which once again I think is a fairly bearish signal because it implies or signals that there's going to be a forming sell wall for Ankr that is probably going to be challenging for Ankr bulls to absorb, especially in a short time frame, right? And then if we look at the exchange inflow, so the difference between daily deposits and daily and exchange inflow is the daily deposits shows you the amount of addresses that are moving Ankr to exchanges, whereas exchange inflow shows you the total amount of Ankr that is being moved. I think both have merit, but I think exchange inflow actually shows you, okay, exactly how big is this sell side pressure? You know, is it a couple of $100,000 worth of Ankr, or is it a couple of $1 million worth of Ankr? And what we see is, and this is why I said I think Ankr is quite interesting, and I think this is what you can take away from Ankr, even if you don't care about the coin, is that we very often see these types of spikes in exchange inflow around the local top. So you see it here, you see it here, here, and then over the last 24 hours. So pretty much during each of Ankr's sort of local price stops, local price milestones, we saw a massive amount of Ankr being moved from individual addresses like yours and mine to centralized exchange wallets, suggesting that people are starting to take profit, and as a result, a short-term correction might be imminent. So if I am currently interested in Ankr as an entry opportunity, I would definitely wait until exchange inflow normalizes. Once again, this isn't to mean that Ankr can do another leg up like starting Monday. It just, however, means that there's an increased risk of a short-term correction, or there's an increased risk that this sell side pressure is not going to be absorbed by the opposing side. And then if we look at long-term holders, I think we're going to see a very similar picture, right? So this is some massive outlier, and that's why I'm going to zoom out of it, just to show you what happens here. So once again, age consumed, like I mentioned maybe 10 minutes ago, is a metric that tracks the amount, or the amount of previously dormant coins that are moving on the blockchain. When you see spikes in age consumed, that means that coins that have been dormant for a long time, that have not moved from their wallets for a long time, relatively long time, are now starting to move on the blockchain again. The reason why this is important is because that means that long-term Ankr holders are starting to exhibit shifts in their behavior. They're starting to move their bags after a very long period of hibernation. And that's why it's not surprising that you saw, these cluster of age-consumed spikes before a correction here, and then another very large cluster of age-consumed spikes before a correction here. Now, like I said, sometimes you will see these massive outliers that don't really have anything to do with price. We could go into exactly why this is by looking at the top transactions here for Ankr in this time frame and figuring out what this exactly is. Usually, it's probably like some major move from a team wallet to somewhere else, or exchange like Binance 1 moving to Binance 7. So isolated spikes in age consumed aren't great indicators. Usually what I like to look for, because they can mean anything, right? Usually what I like to look for is these cluster of spikes, because they really suggest a network-wide intent to move bags to start taking profits. And then if you look at network realized profit or loss for Ankr, it's the same thing. So what is network realized profit or loss? A very quick refresher. It's a metric that tries to calculate the overall ROI of the network on a daily basis. Spikes in network profit loss suggest that coins that are being moved on this particular time on average are being moved at a significant profit, and then dips mean that on average these coins are being moved at a significant loss. So this is why, once again, it is really not that surprising to see spikes in an Ankr's network profit loss here, or on the first sort of a price stop here, and then once again here, and then we see this massive spike, which is probably just caused by one or two wallets, so I wouldn't read too much into it. But in general, there's a cluster of network profit loss spikes for Ankr over the last 24 to 48 hours, suggesting that a lot of people are just taking profit, reducing their exposure, mitigating risk, and applying sell side pressure for the coin. And that's why I would be definitely wary if I was investing into Ankr. I would definitely be wary of trying to find a good entry opportunity right now. Now, I also want to very briefly show this little guy here. So let me zoom out of these massive spikes. Yeah, so this is also something that I see quite often. Well, every now and again. Network profit loss can very often be used as a good sort of top indicator, but I also think that it has some value as a potential bottom indicator, especially when you see cluster of these types of dips in network profit loss as the price starts to correct. It usually suggests that people are selling at a massive loss. It suggests that people that have probably bought here, maybe some even long-term Ankr holders, are just giving up on the coin, moving away, and suggesting wholesale holder capitulation. When that happens, if other metrics show that Ankr has a potential to bounce back. And if you believe in Ankr's fundamental in general, this can be a pretty good or an opportune, interesting time to accumulate, right? I saw these similar types of dips in like iFi and Chainlink, so it's not really something that's endemic to Ankr in any way. I think, you know, in general, when you see these massive dips, that means, oh, okay, a lot of people are overselling, they're over panicking on this Ankr dump, and that's why if you believe in Ankr, it could be a good time to because if there's a lot of people looking to buy the dip at this point in time, this sort of sell side pressure is going to be absorbed very quickly and rejected basically, and this is what happened for Ankr on just a couple of days ago. So this is what I see as far as Ankr is concerned, right? I hope that was useful. All right. Second thought. The second thing that I saw was XRP and Link. Brian, did you see anything else as far as specific coins that people wanted us to look into? I'm just reading chat.
I'm checking the chat now. It looks like TRB was brought up. We had XRP.
I saw a couple of XRP shout outs. So let's do XRP and then we can end with Litecoin. Although, you know, I think Litecoin is very likely going to be sort of tied to BTC in this particular stage of the rally, but you know, we'll see what its own fundamentals show. So okay, XRP has been kind of moving upward over the last 48 hours. Let's see what its on-chain and social data are showing. So actually, let's start with general on-chain activity for XRP. So this is active addresses, or basically the amount of unique addresses interacting with XRP over the last, in the rolling 24 hours. Pretty much just, you know, we've normalized after the February dump, and currently there's about 10 to 12K addresses interacting with XRP on a daily basis. I think, you know, ideally what you want to see is you want to see an uptick in daily active addresses, but a decline in its price, suggesting that, you know, people are starting to actively use the blockchain despite the fact that its price is kind of tanking, right? Currently, we're just at a sort of a neutral level that doesn't really, you know, go here or there. Let's use MVRV here for XRP analysis because we haven't really used it today, and I see it in chat already for a couple of people asking about MVRV. And I do think that it has a lot of value as a sort of both short-term and long-term indicator. Just let me take some water first. All right, sorry about that. All right, so what is MVRV? We haven't really touched on it today at all. MVRV is a very popular on-chain indicator that tries to calculate basically tries to calculate the average profit or loss of a certain group of holders. Really, it's the difference between the market cap and the realized cap of a coin. And if you really want to find out what that means, I wrote a detailed insight about MVRV last week. Let me show you here. Where is my insight? Gary, if you want to share this in chat so people can take a deeper look into MVRV. Here we go, building real-time price models with MVRV ratio. So we've done some backtests on MVRV just recently, and I'll get into that in a minute. But essentially, if you want to read about exactly how MVRV is calculated, you can do so here. Needless to say, or what you should know is that the higher, as a rule of thumb, the higher the MVRV ratio, the greater the profits of a particular group of holders that we're observing. And as a result, the more likely it is that they are going to start claiming these profits. And as they claim their profits, they're going to be exerting negative or sell-side pressure on the coin, right? And then vice versa, the lower the MVRV, the more undervalued the coin is according to this metric, right? So what on-chain analysts do in general is they look for high MVRVs as sign of overvalued coins, and then low MVRVs as signs of undervalued coins that might have that they might have an opportunity to accumulate and enter into for the time being, right? So let's look at the last year for XRP. All right, so what is the 30-day MVRV, for example, here? So the 30-day MVRV shows the average profit or the average loss of all addresses that have acquired MVR, that have acquired XRP in the previous 30 days, right? So for example, currently we're at about 11%, which means that an average profit of XRP 30-day or short-term XRP holders is plus 11%. Obviously, this is not going to be exact because on-chain data is there's a lot of transactions that aren't necessarily buys or sells, and MVRV does assume that most of the transactions are buys or sells. So take this with a grain of salt. But on average, it seems that people or short-term XRP holders are about plus 11% in profit on their initial investment, right? So as a rule of thumb, we have seen this previously. Usually it seems like if you obviously assume that these were massive outliers, which I definitely think they were, usually when you see moves above like 15 to 20% in the past for XRP, they suggest that we're slowly moving into the territory where short-term holders are starting to realize some profits. So if we move back into the last 3 months, you can actually see let's zoom in here a bit. You can actually see that we're slowly approaching a point at which MVRV peaked previously during the March 22nd top. So that was about plus 22%. So we're not there yet. And I think over the last 3 to 6 months, XRP's MVRV has risen much more than 11%. So he was 28 here, almost 50% here. I would take these as massive outliers, so I wouldn't really take them into consideration. I would take this, so basically 40%, 45%, and then here we've already started flattening out a little bit at about 26%. But in general, let's say anything between 25 and 40% usually seems to, at least in this rally, seems to indicate periods where short-term holders start taking or claiming some of their profits for XRP. So we're not undervalued as far as short-term XRP holders are concerned, but we're not at the peak yet, which means that XRP could have more room to grow according to this indicator before we start seeing a correction. As far as long-term XRP holders are concerned, yeah, it's a similar story. So we're slowly moving into the overvalued territory, but we're not there yet. Let's see. So previously, XRP's 365-day MVRV peaked at about 40%. And then currently, we're about 31%. So we've still got, and then if we look at general trends, yeah, 40%, 45%, up to 55, 60%. So we're moving into the sort of overvalued territory for XRP in terms of the MVRV, but we're not fully there yet. I would definitely the way that you want to use MVRV is you want to buy when the MVRV is low. Like, for example, if we look at the 30-day MVRV, like this is fine. It suggests that, especially if it coincides with like historical bottoms, obviously this is a massive outlier. This whole thing is a massive outlier for XRP because of SEC and because of the flare snapshot that was here. So, it's kind of can be a little bit difficult to read XRP's chart, but if we assume that this is just a massive, outlier, these levels seem to suggest that we are approaching a local sort of support level as far as MVRV is concerned. Anything around, so this is what, 6%, minus 6%, minus 16%, minus 10%. So between I want to say 8 to 16%, when short-term holders are down between minus 8 and minus 16% on their initial investment, it usually suggests that these are the periods where the coin is undervalued. So the market cap of the coin is lower than the fair value of the coin, according to this metric, and usually it suggests that it might be a good time to accumulate, right? So we're not there currently. We are kind of clearly into an overvalued territory according to this metric, but we're not close to historical peaks yet. Hope that makes sense. All right, let me look at exchange supply. Actually, no, let's look at H consumed. Okay, so there also seems to be some amount of H consumed activity here at the bottom, once again suggesting that long-term holders have started to capitulate around here. So similar to what we saw with Bitcoin. You know, some amount of fear is always good to see on these charts. I think our exchange metrics for XRP are being redone actually at the moment. Yeah, because we had a bug with XRP's exchange inflow for the last week or so. It showed no data or wonky data, so that's why usually we have it. It's just currently only supply outside of exchanges that you can see. All right, let's look at balance of addresses, supply distribution. So what are like large XRP holders doing, right? So let me take the price of XRP. Actually, I should have first deselected everything and then took the price. All right, can I delete this chart just to make it clearer or larger? So let's say these two groups are probably the ones that we want to look into, right? I think this group, 10 million and above. First of all, how many addresses hold this amount of coins, 10 million and above XRP? It's about, oh, both of these are balance of addresses. Wait, let's take the number of addresses. So, okay, first of all, let's see how many addresses are in each category, and then we can see what they've been doing with their money. Delete this chart. Okay, show me the biggest group of XRP holders. There's only about 300 addresses in this last category, so 10 million and above. So I think usually what you're going to see is that those are like escrow wallets, T wallets, exchange wallets. So usually I would be very, wary, W-A-R-R-Y, in taking this as a sign of sort of whale decline, right? Because I think it's mostly going to be populated by not actually whale wallets, but rather T wallets and exchange wallets. So usually that's why I like to look at two groups below it. In particular, 1 million to 10 million and 100,000 to 1 million XRP. I think both of these can exert some amount of impact on the market. So let's try and zoom out of this snapshot snafu. So this is when a lot of people just held XRP because of the flare snapshot, because as the more XRP you held, the more flare you could have claimed. And then the moment that the snapshot was taken, everybody just dumped XRP. And this is why you see these massive sort of ups and downs in their balances, right? It's just I think the incentivization was all wrong for that flare airdrop anyway. So zooming out of that, both of these groups are starting to accumulate again. We saw 1 million to 10 million kind of start to consolidate their holdings around XRP's top here. They actually dropped before XRP started to correct. Yeah, between February 17 and February 22nd, we had a fairly big decline in the amount of XRP held by 1 million to 10 million addresses. This is the percent of their total supply, or the percent of supply of XRP that they hold. So it went from 5.6% to 5.53%. So that's about 1 let's say, or actually 0.13% of XRP's total supply being taken away from these addresses in about 5-day time. So since then, since they dumped around the XRP top, they started to accumulate once again. Seems like buying the dip was their prerogative. And then as far as 1 million to 10 million, 100 to 1 million group is concerned, these are not even millionaire wallets. Some of them are, but XRP is currently what, 0.5? Yeah. So these are already like sort of mid-level to retail sized holders, and they've generally been accumulating. So the whales seem to be fairly confident. There seems to have been a little bit of a decline here around this sort of XRP rally, but in general the trend is up. I would like to see a stronger uptrend, similar to what we've seen with Bitcoin in the last week or so, but it's not, at least we're not seeing like a very strong consensus that whales are dumping XRP at the moment. So I think overall, on-chain metrics for XRP aren't screaming top, at least for now. They're screaming, especially the MVRV, showing, yeah, we're moving back into the overvalued territory, but we're not there yet. Whales are still not showing signs of like lack of confidence. Age consumed or like general sort of long-term holders seem to have exited a little bit at the bottom, but overall seem to be content with holding. You know, for my money, I'm not seeing any sort of immediate top signals for XRP. Let's look at its social volume. Social volume and price. Oh. Yeah, okay. So yeah, once again, spikes at the top here and top here. Currently, we're not seeing any sort of massive uptick in social volume or mentions of XRP. This is good. This is what you want to see. I guarantee you that, well, I don't want to guarantee it, but I think, based on my previous experience, that if we see XRP continue to pump, we're going to see spikes similar to this one, similar to this one, similar to this one. And that's when you know that the crowd is really starting to talk about XRP and is probably going to affect on its price negatively. For the time being, doesn't seem like the crowd is very much aware or cares about the rally, which, although sometimes counterintuitive, can be good for the price of the coin. It means that there's more room to grow before the FOMO crowd gets in, right? So I think that's going to do it for today, guys. We're already 10 minutes past where we want it to be. One thing before we end, and I want to keep this a tradition because we've done it last 2 times. Let me just change my theme because I have a dark theme on my computer and it messes everything else up. So
yeah, you beat me to it, Dino. SanR, you're going to touch on?
There we go. Yeah. So I just wanted to showcase SanR once again. Guys, if you're not there already, this is something that we've been building sort of in the background. It's a decentralized marketplace for price predictions and price prediction signals. So I mentioned it a few times last week and the week before. It's completely free. Currently, it's kind of filled with early adopters, Santiment team members, and some early community members, where we kind of compete against each other, and also in general just look at what each of us thinks about the market. The way that it works is that you can select a coin based on we have currently about 30 different assets on the platform, from top caps to sort of contenders and a lot of DeFi coins, and you can tell us or create a signal whether you think that the coin is going to keep rising or continue to fall. You can also set advanced parameters like target price and stop loss. If you want to enter your forecast into the reward program, because every 14 days, I believe there's a sort of everybody that has staked SAN gets the best predictions get a portion of the reward pool. You can do that as well. Last week, I said that KNC was going to keep dumping compared to BTC. This was, I mean, it wasn't really like a strong prediction. I was just kind of demonstrating how the platform works. And we were looking at KNC at the time. And I think the reason why I said this is likely to happen is because MVRV was so high. And yeah, it definitely, like, I'm up 7.2% on my prediction. So KNC definitely did decline over the last week relative to BTC. Right. So, for example, if we had Ankr, but I don't think we currently have Ankr here. It's sort of a low coin. What do we have that we
don't have Ankr.
Yeah. So what can we do? Let's say BTC, right? So, for example, if we looked at the whale balances growing, and we saw there's a big decline in general sentiment towards Bitcoin. Let's say we saw a few bullish indicators in Bitcoin's fundamentals, and we're like, okay, I think Bitcoin is currently a bit undervalued. I think it might grow to end the month. You can open a forecast, say, okay, I believe that Bitcoin is going to rise from this point on, open a forecast, and it's going to be logged onto the blockchain. So it's immutable, it's forever available for everyone to see. And I think the reason why this is so cool is because, number one, you can use it as your own sort of blockchain. I think somebody last time said that it's kind of like a blockchain trading journal or a trading journal on the blockchain, which I think is a very good analogy. Basically, you use it for your own sort of sense of market. You go back to all your forecasts and you see how you've done. So I've created a few forecasts before. I think one that I created recently was, that Bitcoin was going to rise. This is when I opened it. This is when I closed it. So you go back and you see, okay, when was I right? When was I wrong? And you can also, first of all, question your own biases, but you can also see what other people are saying about the market. And especially, you can look at their previous predictions and see whether they are a reputable source. How accurate were they previously in predicting the market? And if you think that they've been pretty accurate so far, let's say Short Maniac here has, 20 predictions in the last 2 weeks, and that 70% of his predictions have come true, you might want to follow this account and keep an eye on him, maybe even copy trading for the future. The good thing is that, all of these predictions are forever stored on the blockchain, so there's sort of an immutable proof of your market sense and market reputation. So this is something that we're trying to build up from the ground up. If you think that this is kind of interesting, and if you want to, compete against me and other people in the Santiment team and other Santiment community members, check out SanR.santiment.net. Like I said, it's free. You just connect your MetaMask account, make a few predictions, and let's next week let's see who beats who here. So like I said, here this isn't an investment advice. I was just demonstrating how the platform works, and I said BTC might rise based on a few indicators that we were showing, right? Okay, I think that's gonna do it for my end. Brian, anything you want to say before we sign off for the day?
No, definitely check out SanR, guys. As Dino eloquently showed here, it's a great marketplace to really get a gauge on what other advanced traders are doing and thinking in the space in a very transparent way. So if you haven't checked out the platform, I highly recommend it. It's an extremely useful tool, and you can make free crypto if you have some correct predictions with no downside if you're wrong. So highly recommend it. And I just want to say thank you as always to the continued word of mouth that you guys are spreading in regards to this weekly show that we do. It's been fantastic having you all here along our journey as we've grown. So we'll keep it up and try to give you the content that you want to see. Feel free to always give us feedback, and we'll see you guys next Friday.
And make sure to like and subscribe, because both us and YouTube really care about it. So thank you in advance. All right, talk to you guys in 7 days. If you want to keep chatting, we're going to be back in our Discord after the call. So, Sandbase Pro Group, as well as the general announcement channel, general channel on Sentiment's Discord. This is where we're going to keep talking about the market. So if you don't want to wait until next Friday, talk to you there. See you guys. Thanks a lot for sticking by.
Great stuff, Dino. Thanks, everyone.
Thanks, Brian.